Hello and welcome to another edition of Stockwatch. So as we roll into 2021, we've got past the first quarter and in the middle of the second quarter now. So a few big companies such as Google and Goldman Sachs have already reiterated their desire for the staff to get back into the office by the end of the year. Now, Google have been a little bit more lenient as their chief executive sent an email to encourage employees to return to work, but that's just for like 2 or 3 days a week whilst the lockdown eases in certain parts of the globe, namely America and the UK. So the firm actually began reopening offices in April last month and has now laid out pretty much a time plan or roadmap, you can call it, of people actually coming back into the workplace. So in the email, the chief executive has said he admires the benefits of working from home, but also admires the benefits of working from the office as well. In terms of the number of days in each location, he said that the teams would come together in the office approximately for about 3 days, like I said, and work whenever it suits them best. They can actually pick and choose the days they can come to. So that was quite a nice approach from the Google chief executive. However, for Goldman Sachs, they have actually issued the same kind of statement saying that US bankers should be ready to come back into the office on the 14th of June and the UK bankers should be able to come back on the 21st of June. And by that time in the UK, the restrictions for COVID should be completely lifted if all goes well. But, whereas the chief executive of Google is a bit more lenient, like I said, in giving the message in an email to employees, Goldman Sachs boss David Solomon previously described it as an aberration. So it'd be interesting to see what other big companies will see this roadmap to getting back in the office or actually staying working from home, because Twitter by contrast has said that their employees can work at home forever, whereas Facebook has also come out to say that its employees can continue to be home based as well. So very, very significant findings, and it will also add to if there's going to be a shrinkage in office space as well for these big companies. You have especially London, in the Canary Wharf area, you have all these big towers and offices that are pretty much empty at the moment. And even when staff do get back into the office, will they see a significant boost? And will office space be used and be fully back to how it was pre-pandemic? We'll have to wait and see. So a few things to consider there. So the last time I looked at Google about a week ago, I was looking at this long-term trend line that I've just been monitoring for quite a while now, for the last 6 months. And as I said previously, we had this like hummingbird action where it was bouncing off this trend line. We actually broke it recently, but now the bias is slightly on the downside, as you can see. I'll just zoom in for a bit of a better perspective. And with the assistance of the Ichimoku cloud, we are still trading quite far away from it, but the conversion and baseline of the Ichimoku indicator is just grabbing on to the prices now. This is on a daily chart. We are trading in between the lines, which means that we could be pulled down to roughly about this area here where the line is just starting to take shape. So just above the 22,000 area, sorry, 2,200 area. So we'll just wait and see if that's going to have any more downside effect. I'll just put it down on the 4 hour, just to see intraday. And as you can see here, we're a little bit closer to the Ichimoku cloud intraday. We have actually tested a little bit of the top border of the cloud. So I'll just be seeing if any more justification can be put on the downside. There is a slight bearish divergence here as well. This could come into play, but I'm expecting a little bit more downside if we actually move past this recent spike that we saw at the beginning of in the trading session yesterday when the markets opened. So just a few things to look out for Google. Goldman Sachs, however, on the other hand, I'll just put it out to the daily just to start off with. I'm just looking at the moment. They had this recent surge in prices due to record revenues when they released their earnings recently, and these record revenues have been very, very bullish for the price. But again, I'm seeing a slight bearish divergence that could probably halt proceedings as we look to see if we're going to get any more upside here. We've bounced off the top border of the cloud, so things are looking good for Goldman Sachs. I'm just going to keep an eye if this divergence gets any more bearish and we'll see if anything comes of it in the next few trading sessions. Obviously, we have the NFP tomorrow as well, and this will see if it shakes up any banking stocks as well. On the 4-hour chart as well, just got to see if we're going to, as I said, this bearish divergence, a little bit of a long-term divergence if you're looking at it like that, but we're just going to see if it's going to start moving a little bit more higher, and if we can keep away from these top borders of the Ichimoku cloud, which is roughly about the 300 and the high end of the $330 range. We're roughly trading on the high end of the $350 range, so $20 gap there. So we'll just see if we're going to see some more downside, or if it's going to start pushing higher. So very, very interesting for Goldman Sachs as well. So thank you very much for joining me. It's all from the Stock Watch today. If you have any comments or queries, as usual, please feel free to add them to the post, and I'll get back to you as soon as possible. Have a great trading day ahead, and bye for now.